Welcome to the Final Bar, the show where we check out the most interesting charts to get set up for the following week. With submitted market studies, we'll be finding out the inflection points for minimum risk, maximum reward. I'm Greg Schnell, and I have Gretchen Pitluck, our producer, on board with me. Good afternoon, Gretchen. How are you doing?
I'm great, Greg. How are you?
Good. We have lots to cover off today. Gretchen is just joined Stock Charts, and so we look forward to having her on our show for many editions. So we're happy to have her here. I'm going to jump right in because I've got probably 45 minutes of stuff I want to cover in 30 minutes. So we're going to speed along pretty quick. Today, agendas. So last week we set up how to set up an industry group, an industry chart list, and it was really kind of I'll call it a key tenant or a keystone of using stock charts is making sure that you have your charts set up so that you can use them and access them in a meaningful fashion. Today, what I want to get into is quickly finding top performing industries. And last week was a little bit generic. This week will be specific to this week. What exactly is top performing? How do we find it on the website? Just some ideas to think about, whether it's big picture, is it industry or consumer, is it energy or industrials, that type of thing. And then getting into, if cyclicals is an area that seems to be working right now, why is that? Does it make sense? And just kind of rolling back in your head to see if there's an obvious reason to pick something. And then we're going to talk about comparing choices for investment. So lots to get to, and let's just jump over to my Safari browser here. So first of all, everybody's familiar with the homepage, but on the homepage over here, your control center will say basic or extra control center or pro or whatever. And so in here, there's so many good things. This is a really important area, and I can't stress enough that if you're not scrolling through this, you're probably missing a lot of the big parts of the website. But today we're going to start with a couple of things. So first of all, obviously the market overview is in the middle, and the market summary for what's going on day to day is right here. This button and this button over here. And I'm sorry, I should have put my pinpoint on. Let me just see if I can do that. There, that'll make my marker a little bit bigger. So here on the left is market summary, and this one are the same. We're going to go into sector summary first of all and click on it. And I don't want to click here. I've already opened the tab, but because we're going to go back and show you how to get to industry summary as well. But this is the sector summary. And you can see that today materials was one of the better performing sectors. Well, after the Dow dropped 400 points or whatever, gold was up 10 or $12 and then kind of leveled off towards the end. So I don't really think it was that materials was particularly good. It was that everything else was particularly horrific. But this is an important area right here where you can pick a different time of day and week or month. And so one of the things that traditionally can work is looking at the big picture on monthly. And what we see here is the consumer staples, industrials, and financials are clearly out of favor for the month. Energy, by far, look at this huge bar over here, was the biggest area of the market. And the important thing to remember about markets is they evolve or change regularly. And so one of the things I want to talk about is I'm not going to actually pick the energy sector today, and I'll try and show you why. But considering I do the commodity countdown, you'd think I'd be all over that. But I'm actually going to focus a little bit on cyclicals, technologies, and hopefully you'll see why when we get into some of the other stuff. So, but it's very helpful to just keep looking around. And this is one of the reasons that I think we want to focus is even on the weekly view, the cyclicals is holding up and the energy sector is falling a little bit down. And the utility sector has been one of the better ones. And I think it's just because it was so beat up. But what we continue to see is industrial, financial, and consumer at the bottom half of the range. And so just in general, they're out of they're struggling quite a bit. Now, energy, I think one of the things that's happened is it's run up to $70. What I don't like about energy is that oil typically goes up the most when the US dollar is falling. And currently we've had a US dollar spike. And so that it doesn't necessarily put brakes on energy, but it's not a tailwind by any stretch. And so expecting the oil prices to keep running when the US dollar is rising, I think is a tough trade, and there might be easier trades. So that's one of the things we're going to talk about today. Okay, so in general, on the weekly, so we're at the 1 week here. On the weekly, cyclicals is still holding up. Utilities are trying to rise up, and again, they've been a beaten down sector. And materials, the gold stocks have tried to trade better than gold, which is a reason to like them. But so far, the trades haven't been working, and I have a few of those on. Energy, I've cut a large portion of my energy portfolio. I still have some in there in case it continues to work, but a lot of these stocks seem to be getting shot one at a time. So just in general, there's some, I think the headwind from the US dollar is too big to overcome. So again, with this whole scrolling exercise, up here in the top are a bunch of the workbenches. Down here in the middle are the charting tools, different types of charts that you can create. And at the bottom is the reports and analysis. And again, for big picture looking, we want to start in the reports and analysis because this helps us find what's working. So if we go to industry summary and we look, what happens here is this is actually broken out by groups. So you can see the cyclicals, here's technology. And as we go through, these groups are laid out here for us. But one day is pretty short, and so I would prefer to change it up. And so the way to do that is to go up to the top here, and you can either pick 1 week or 1 month, but we're going to go with 1 month just to take a look at how things looked. And in general, let's look at cyclicals. And one of the things I like about the cyclical sector right now is if we look down here, broadcasting and entertainment, obviously all of the change in home media and that kind of stuff is really difficult. So it's a rough area to go. But I think one of the things that I'm noticing just when I look through this list, if we start here, where it's been green for the last month, here's restaurants and bars, automobiles, apparel retailers, home construction, gambling, toys, home improvement retailers. All of this to me, with the exception of maybe media agencies, is people spending money like in the consumer services area and not as much about industry. And so when we look down farther, I'm just going to miss technology for a second, but look at industrial here. Over the last month, defense, how could defense be down? I mean, we're always buying stuff like that. So anyway, trucking, airlines, commercial vehicles, industrial supply, aerospace, all of these are getting very, very weak over the last month. And the only thing that's really perked up a little bit is marine transportation. However, it's been perking up for a while. And if you go into that group, it's mostly small cap stocks. There's no real big players. So we can click on it and it'll show us all of these. But just looking through the scooter rankings, they're all small and mid cap. And then the other part about them is if they don't have a scooter ranking, they're even smaller. So that kind of adds more pressure to it. Anyway, I would encourage you to just go through and take a look at it. It doesn't take very long to just kind of click through what we're doing here. But the point is, when we get down to this industrials level, a lot of these, oops, I took it off the weekly. Let me go get 1 week of data or 1 month of data. Sorry about the scrolling. Industrials, what we see here is, they've really been struggling over the last month. And if we look at materials, they had a great month, and that was, well, the US dollar was flat. And now all of a sudden the US dollar has broken out, and there's a little bit of this was on the tariff stuff that made the aluminum look particularly robust. Caterpillar mentioned that they think they might have hit peak earnings for the cycle. So that put pressure on mining. So a lot of this is changing rapidly as we're going along here. And steel is right up against a big long trend line. So those don't look that good. And if we just bring it up, sorry, I can't move my mouse over there, but you can see from September, November, uh, April, and now May, there's a pretty solid trend line there. And there's one that actually goes back 2 years, and steel is just sitting right on that trend line right now. So important to be aware of. And gold mining continues to have higher highs and higher lows. And so that's an uptrend right now. The US dollar has been running pretty hard, so that last drop on there makes that look more difficult. If the US dollar was going to pause at all, we might get some run continuing in gold mining or whatever. Here's the energy sector for the last month, and you can see it just absolutely roared. Coal up 20%. So those are pretty stunning gains. And the integrated oil and gas, which is the refining, that's another area that had a pretty good month just because oil continued to move up. And so gas prices were going up. So that improves revenues, even though margins might stay flat. Looking at consumer staples, all of these areas clearly out of favor and not really something that we probably want to look at for investing in now, unless you're really looking to buy a major reversal. But at this point, there's nothing here that looks exciting to me. And looking through healthcare, these ones have been performing pretty good always. Medical supplies and medical equipment, the companies like ISRG, Intuitive Surgical, those are really big companies doing quite well. The whole healthcare, biotechnology, pharmaceuticals has been pretty good. Utilities has started to pick it up a little bit, but telecom continues to be ugly, both in Canada and in the US. And so I think there's a lot of trouble brewing in that area. And it's going to be hard for them to show a lot of revenue growth, I think. Anyway, looking across this area, there's a little bit of action here in these utilities that might be more interesting. And then look at the financials, which is one of the largest parts of the S&P 500. For the most part, nothing really doing well. And the big stuff like banks, unchanged on the month, but mortgage finance, life insurance, reinsurance have all been dropping. And I thought if the interest rates were going to break above 3%, this area would surge. As we got to 3%, it literally just stalled. So that's one of the reasons that we can keep looking around. But I think one of the juiciest areas of the market, if we're just going to talk about for the next month, let's say for the month of May, looks to me to be in this area here. And so with that, we can go into specific areas, and I want to do that now. I want to go in and look at these different areas. So again, whether the way we got there, just so everybody remembers, is you start on the member dashboard and you get into this industry summary. And in order to get to the sector summary, just to see which groups are doing well, and remember to just keep changing this time frame, it's going to help you find what's doing well and what's out of favor. So now that we've looked at the industry groups going back, you can see consumer staples, industrial sector, and financials have been really underperforming, and not a whole bunch of juice there that we really want. The utilities, it was gas and water services that were looking better than others. But I think one of the more exciting areas here is the cyclicals. And that's just because I don't know if it's the tax change or if it's just the fact that everybody's working in the US and you have low unemployment, that type of thing. All of those are adding up to make more common sense. And when I mentioned it originally in the slide, big picture, industry or consumer, to me it looks more like consumer is the right place to be, and it looks like the cyclicals, not the consumer staples, are a winner from the economic cycle. And just when you have low unemployment and you have rising wages, that's a better place, and the cyclicals is probably the way to address that part of the market. So let's go back. Okay, jumping into the industry groups themselves. Now, Amazon is the biggest one in broadline retailers, and I can't imagine anybody saying don't buy Amazon, because it just seems to be almost accelerating its growth right now. You can always sort by large cap, mid cap, small cap. That's a nice way to do that. And when you do getting into all of these, one of the things you'll find working through here is that you can hover over these to get a quick picture of the chart and see which ones you like. So you don't have to do a whole bunch of work. You can't do a candle glance in this particular way. And the way you would do that is go and actually set up an industry list, like I suggested last week. And by creating that industry list, then you can go to candle glance format or 10 for page. But here you can just hover over and get a quick look at the ticker symbols and see if there's something you might like. And Costco's right up against the top of the range right now. And here's Walmart, not quite at the top of the range, down about $20. And VIP Shop Holdings, all of these different ones are sitting here. But in terms of the large caps, you're seeing Macy's is at the top of the range. Target not as bad, or not as bad as Amazon, as Walmart, but clearly Amazon is the leader, and it just seems like they're getting into so many things. I heard they were getting into payment systems now, so those are pretty important things to be aware of. And so I would suggest that there's some stuff here, but more than just the broadline retailers, because I think one of the problems about taking these large swath companies is they don't have great growth rates, with the exception of Amazon. Amazon clearly has a great growth rate. But if we get back into the other types of industry summary here, I'm just going to go back to 1 month. And what we see here is the specialty retailers. And when we get into specialty retailers, looking through here, you can do the same thing. You can sort by market cap and putting these different stocks, lining them up just to go see what's stronger. And you don't have to use this method, but really quick it comes to just looking. Here's Overstock, here's Shutterfly. Penske Automotive Group is not as good as auto, and this auto chart looks pretty weak, but it's had a little bit of growth. So the scooter ranking can help you. You can see this says 2.9, this says 55.6. So I'm assuming this chart's going to look a little bit better than that auto web. Now here's Bed Bath and Beyond. That doesn't looks more beyond than anything I want to get close to. And here's Dollar Tree, pulling back actually after hitting a new high in January with the rest of the market. And just quickly scrolling through here and seeing if there's charts you like. That one looks like it's setting up a breakthrough 120. I think would be a pretty nice entry. Here's Dollar General, CarMax. And so you could just keep working your way up this list. And I think one of the important things about being able to do this really quick is just look and find some nice charts in an industry group that we know is performing well. So here's Tiffany. It looks like it's trying to break out to new 3-month highs. Tractor Supply, ag is starting to pick up, so that one might be one to keep watching on as the grain prices have started to improve recently. And here's O'Reilly Automotive, big push in the last week or so, maybe 2 weeks ago. But the bottom line is, a big sudden surge, hard to buy at the top of those, but perhaps there's an entry coming there. And here's Ulta Beauty Salons, and that's a beautiful base set up almost for a year here now above 240. That looks pretty tempting. So my point is just scrolling through these charts, and again, it sounds like you've done a lot of work, but we're only 10 minutes in or 15 minutes in, and what we're seeing here is a whole bunch of companies that real quick we can make some decisions on the chart shape that gives us an idea of what we'd like to look at. And just working our way down through whatever Office Depot, electronic office systems and stuff like that was way down. Well, here's Office Depot, obviously at the bottom of the map. Big Five Sporting Groups, that one's just starting to break out. So the scooter ranking over here in the middle is a little bit better. And this number, so for everybody who doesn't know, so the scooter ranking tells you how that stock is doing compared to its peers in either the small cap, mid cap, or large cap group. And then it compares its price action based on moving averages and rate of acceleration and that type of thing, and gives you a number. And that number here, and in this particular case, this stock is outperforming 97.9% of the small cap stocks. So that's a pretty good clue that we're going to like the chart. Sure enough, it's in the top right hand corner. And And eventually, if you're going to be in a top performing stock, it needs to get into the top 25%. I mean, at 50%, you're getting better than half of the stocks. But the real question you want to look for is stuff that's really moving well. So here's something called the At Home Group. I don't know what they do, but the chart's breaking out to new highs, pretty much for the last 6 weeks. So it's a pretty good place to, keep looking. Usually when stocks start making new highs, there's a reason, and we want to be aware of it. And again, bottom fishing at stocks, with a scooter ranking of 11, that's just really, really hard work. You're betting on something to reverse really significantly. So it's one thing to buy a pullback like on this flowers.com and, maybe a full stochastic signal. And I'll get into that on this final bar show. As well, it'll be part of my ChartCon presentation. We want to make sure that you're buying a dip and it goes on an acceleration. When you're buying something like this is not a dip. This thing is pulled back, 30 or 35%. It doesn't look like something you want to jump onto. Okay, so I that's one of the ways to look in the market. So I think we've given some ideas there that Ulta Beauty Salon was one of the interesting ones. O'Reilly Automotive looked good. Tractor Supply looked good because we might have some potential in ag area of the market. And then Tiffany and Company, that stock has bounced back a little bit. So those are other ones that we could look at. Okay, jumping back, just go back into 1 month. And the one area that I think is particularly interesting is this toys and gambling, and they both had relatively good weeks. So if we just go to the last 1 week here, they moved up from where they were in the monthly, which was down a couple of notches, and they're doing well up here. I think this travel and tourism obviously is a big area, so we can go into that. But I want to just cover off this gambling and toys because toys is also a lot of the electronic entertainment. And those stocks are starting to do particularly good. So here's the Stars Group, and they are building a global brand. They had the Playboy brand. They have a lot of online gaming, and they recently bought online betting in England. And so this is an interesting company that's got a little bit of price action going on it. When we look at the chart, that's hard not to like, and they continue to perform. So, these are interesting stocks to just be aware of the change. Now, here's Nevada Golden Casinos trying to bounce off the bottom. I don't think that's one I want to look at. One called 500.com, obviously nice price action, but pretty small because it doesn't have a scooter ranking and it's not even in the small caps. It might get re-rated this year with that kind of a price move, but so far it wasn't there. Here's Red Rock Resorts, and it looks like it's trying to make new 6-week highs, so that's a little bit better. And Full House Resorts, that's a nice chart with 3-month highs. 3-month highs are what the Turtle Trader talked about, just getting something breaking out to new 55-day highs, which is roughly 3 months of trading. So looking on this chart, you can just see 3 boxes there. So that's 3 months and real rough. It's trying to push to new highs. So it might be something worth watching. But again, it's very small, $3 stock, and it doesn't have a scooter ranking. So it's pretty small. Golden Entertainment, this one looks like it's broken its downtrend, so that's worth investigating. Here's Melco Entertainment. That looks pretty much up and away. And on that case, you're looking for some sort of a pullback that you can buy the dip and pick it up. Wynn Resorts looks like it's ready to break out after all-time highs. It made that big spike high and then had that huge pullback, not so much on anything the company was doing, but that was the issues with the founder, Steve Wynn, and all of a sudden the stock got sold off, which was just a great buying opportunity. And now it's up another 10% since then. Las Vegas Sands looks like it's ready to break out to new highs. And Penn Gaming, this one, recent sudden surge, so I always find those ones I have to wait for a pullback to get interested. And this one's just dropped too much for me to play unless you really like playing oversold stocks. But this one looks, when there's just so much strength in the other ones, I think you want to avoid. Um, and here's IGT, International Game Tech. This one's been consolidating for a few months. I think it's worth keeping on the radar, but it's nothing really magical that we want to look at. And, here's Empire Resorts. We can look at the scooter ranking at 15.6. It's going to tell us it's a weak stock, and there's no real surprise there. Okay, Boyd Gaming. This one's been trying to break its downtrend, hasn't really been able to build a base, but that's one to keep watching because if it does start to turn up, it's had a huge advance. Call this a big consolidation, but perhaps you can get it, you can get going with it again. And these other ones, Churchill Downs, I think they're busy this weekend, and then Scientific Games, breaking out to new highs. So it's very quick to do this, and in a couple of minutes we've covered off all of these stocks. So with that, I should just open the floor for questions and see if we've got any there, Gretchen.
Yeah, we have about 4 minutes left in the show. So let's go to the first question. Energy was the top performing sector this month. So why aren't you interested in it?
One of the problems I have with the energy is that the U.S. dollar is breaking out, and it's trying to break higher. And I think with that move up on the U.S. dollar here, as the U.S. dollar has broken this big downtrend, and on a weekly chart, it's even a little more obvious. This huge downtrend is broken, and we're also seeing the PPO give us a buy signal with a higher low. So that kind of divergence and all of that, it's broken this downtrend in momentum. That means a lot to me. So I think the US dollar is going higher. I don't think this is just a one-off. It might jog a little bit every now and then, but I think the big trend for the dollar is higher. And so I think energy's had its run. It's up against $70 on crude. So let's just go to crude oil. And what we see here is this $70 level. We've been spending 3 or 4 weeks trying to get through it. We've broken out of this big base. There's just not a lot for me that makes me think there's a lot more in the tank, and I'd rather wait for a big pullback on the energy, perhaps starting to pick it up in July. And the second component is if I go look at XOP, we're still in the sideways trading range, so it doesn't look like this is getting as aggressive as the crude price is, and that leads me to believe that we've got more. It's a place in the market where I think it's had a good run, but I'm a little concerned that run, at least for now, needs a pullback. And usually I like to buy the oil stocks around the first Friday in July, what we call the Calgary Stampede Week. But it's just living here in Calgary, that's been a good date to use in general for looking. And last year it was just about perfect. We were buying it in here, and some of the other stocks pulled back a little bit more, but literally a lot of the stocks took off from that particular day. It was a really nice place to pick an entry. So it's not that I don't like energy. It's just that I don't like energy right now because I think it's already had a run.
All right, I think we have time for one more quick question. Why didn't you choose Broadline Retailers?
Okay, so again, one of the things about the Broadline Retailers, it's heavy on Amazon, and don't get me wrong, Walmart, and the Walmart chart looks weak. The Target chart's about half as weak as Walmart, and the Amazon chart looks strong. Costco looks strong, but I think some of the smaller retailers, like in the fashion apparel and stuff like that, just based on the setup that we saw, they look better. So that's probably the important part for me. And with that, I should probably leave it and maybe wrap up the show here. Hopefully, there's some ideas in there for this week. I'm thinking the gaming sector, the toy sector, the gambling sector all look pretty good. So thank you for joining us on today's show. The Final Bar airs live on Thursdays at 5 p.m. Eastern and can be found on the Stock Charts TV schedule for your viewing convenience at other times during the week. It is also available on the Stock Charts YouTube channel that you could watch at any time. Feel free to comment on the show and in the survey box below. With that, have a great weekend and good trading.